This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets, the SPY technical analysis, and doing a small bit on Treasuries for November 13th, 2025. And with that said, let's go ahead and jump straight into the data. Now, we did not have much data today, but we did have the 10-year note auction, and there's a couple mixed opinions on whether this auction went good or not. Um, I'll discuss that here in a couple of minutes, but from my understanding of everything, it went very well. It wasn't a complete blowout auction or anything, but it was, a standard auction. It was a good auction. It wasn't bad, it wasn't weak. So, um, it pulled the yields down. And that's really all we're trying to look for. Um, Other than we're looking deeper into the actual treasury auctions themselves to see if there's any outliers, but with today's auction, there really wasn't anything showing an outlier. And I'll pull up the actual auction results in a second, but I do want to cover just kind of what's going on tomorrow. So very likely we're not getting the CPI this week. From the data sets showing right now, it looks like they have pulled the CPI. Looks like they're still not going to be releasing the jobless claims, probably not until next week again. Now that the government has officially been reopened, the Senate voted, the House voted, and I believe President Trump signed off on it, so everything should be back to business. Um, Probably starting next week, you know. Now, with tomorrow not having a lot of data, we still do have the 30-year bond auction tomorrow. Now, if we're going to get any sort of results like we got today, then we should be seeing the 30-year bond pulling down pretty well. I'd say seeing even below the 4.6% might be within the cards right now, just due to how large the spreads are on everything. We'll see. Uh, I was expecting today's tenure to basically be around this level or slightly lower, basically around that 3.9xx%. But we didn't get that low. So there's still a lot of just, I don't want to call it disconnect, but there's a lot of different theses going on in terms of, again, do we have to really put all of our eggs into the labor market basket, or are we needing to watch for inflation? And a lot of the Fed is still very keyed into inflation. One of the Fed senators, or one of the Fed members actually, I think it was Collins, said tonight that she'd be very hesitant to vote for a rate cut next meeting unless there was much further labor market deterioration. So, for some reason, the Fed is putting off a very hawkish front that inflation is still here. Everything that I've been seeing, along with how treasuries are moving, with just how prices are in stores, seeing guidance reports, everything else like that, it's telling me that no, we're not going to see a reignition of inflation. Rather, we're going to see things continue to deteriorate and potentially that's going to stem out even further. So with that said, there are a couple things I want to show really quick. And so here's really what I mean by the market is trying to price in what's going on with the labor market versus the inflation story. Is that just taking a look at CME, and this is the CME group. I have a link in the description to this, and this shows their expectations for what the rates will be during each of these FOMC meetings, and they price this out all the way to October 2027. So they are always pricing these, and by they, it's not just the CME group, but this is kind of just the whole treasury market pricing in the interest rates, what they have expectations for, blah blah blah. So with that said, looking over December and over the past few weeks, we had an extremely high chance of moving into a rate cut. Uh, Back early October, that December would have basically a 92% chance that there'd be a rate cut. Now, this has been bouncing up and down over the last few weeks, where it went all the way down to 62%, went all the way up to 67%, now it's at 60%. And this number under here, this is the current rate. It has went from it'll be the same rate, 8% chance, the same rate in December to 38%, all the way up to 40% right now. Okay, so this is just showing that there's uncertainty. And what the real uncertainty is you can look at this almost as two different slides, is that the left side, or the left side right here, is telling you the labor market concern. Okay, this is the concern that we need to cut because of the labor market. This is the concern that we need to pause or even hike because of inflation. So, going over these charts and seeing how December is getting a little more uncertain as we move closer to the date, we then go into January. All right, so moving into January, now we're seeing how they're starting to price in a rate cut for January rather than December. Even though the December rate is still there, and remember, this is the current rate is the 375 through 400. This is 52% chance we're going to be at this percentage by this meeting. And this could also be pricing in the December cut. This could be pricing in no December cut. Um, but this one right here is pricing in two cuts. Okay, this is pricing in both December and January being cut. So what I'm trying to say is that while these numbers will fluctuate quite a bit, we are seeing, especially this one right here, starting to really pull up. And while over the last few months that number was a lot higher, as we get a lot closer to this December FOMC, I really think we're going to start seeing this number pull up quite a bit, and one of these sides will lose. Just remember, one of these sides basically will go to 90 something percent. The other side will drop down to basically like 3 to 5%. So one of these are going to really be crushed pretty soon here. And this is really going to tell the direction of what the Fed wants to do. Do they want to work on the labor market or do they want to work on inflation? Because you can't do both. You can't just continue to pause and say that that's handling the concern for both, because that could be really hurting the labor market if there is this significant deteriorating going on. So that's one thing I wanted to discuss, is that always just keep looking at these CME futures. They will tell you a big story, especially when you start going out a lot further. You could start seeing that, wow, some of these dates really do mess with some of these rate expectations quite a bit, even though the sooner FOMCs may not look like it. Now, what I wanted to show with the actual Treasury auction today, and let me make sure I can see it properly on the screen. Okay, you guys should be able to see it quite clearly, hopefully. Now, there's a lot of different data on here, and I know a lot of people don't know how to read this exactly. There's a few things that are very important. There's the tendered row, and this is basically showing all bids that have been gone out. Um, from the primary dealers, those are the basically the banks. Those are the ones that have to kind of accept the treasuries that none of the direct bidders or the indirect bidders are going to go for. So when we see the tendered amount, we're seeing that the primary dealer are bidding a massive amount. Now, if this was the accepted side, this would be really bad. This would be showing that, over 50% of the bills went back to the bank. Now, the tendered side is nice to see, but what really matters is the accepted side. As you can see in the accepted side, only 4.3 billion of the notes went to the banks compared to 9.4 billion going to direct bidders and 28 billion going to indirect bidders. And it's the direct bidders and indirect bidders that really drive the market and drive what the yield is going to be in the treasury results themselves. Now, we had the high yield today equal to 4.074%. Now, a lot of that high yield, uh, this is kind of people misread this a little bit, thinking that 97.5% of the notes, 98% of the notes were written at a high yield. That is not how that is read. Okay, this is just part of the tail. The other part of the tail is when they're actually written, um, what was the stop out price when written? And that's not shown within the treasury auction result. Um, so no, 98% of the notes did not get written for the 4.74%. Um, very, very likely it would be between this medium and high yield that there was the stop out price between there. Going over the data today, it showed that the tail was only a zero point 0.6 or something like that, which is very, very, very low. Um, Nothing about today's auction was out of character. Um, so yeah, I don't believe that narrative when some people post that. Everything with today's auction was very good. Um, we had less than 10% of the notes go back to the bank, which generally the bank will be taking 10 to 15% across the board. So this does show that this auction was strong in its own right. It may not have been the most, um, you know, yield pulling down auction ever, but it was still strong enough. So that's what I wanted to show with the data.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
Now getting into the actual SPY technical analysis. Go ahead and turn on our moving averages and Bollinger Bands. Now I talked about in last night's video, if I'm not having a fever dream or anything, that today would very, very likely be a slow type of consolidating type day. Um, Either we were going to come down and test that 5 month moving average, or we were going to have a somewhat consolidated day. Now, the 5 mile was still quite a ways away. Currently, it's at 677.82. On your side, it probably shows 680. Very likely we'll be opening the 5 mile around that 680 range, but um, today the market was not close enough to hit that range. We did not hit the top of it. We did not test the 5 mile at all. And remember, we have not tested the 5 mile within a few sessions now, so it is starting to really come into range that it's going to need to be tested. Now, with the 5 mile being at 580 tomorrow, that means that the upper bounds of the 5 mile is all the way at the 582. With the overnight being at five, or not five, I mean 682. With the overnight being at 684, that means that we're only $2 above that range. We could very, very much so be looking at a 20 mile, or not a 20 mile, but a 5 mile test occurring within tomorrow's session very reasonably. Uh, the other thing to look at is that the upper Bollinger is continuing to rise. And we did discuss that. If the market really makes a leap and bound for that upper Bollinger, it's going to open up to the 695 and potentially even up to that 697, 698 range. This next move is going to be very, very good. We just have to make sure that are they going to test the 5 mile first or are they going to push for the move first? That's really what the bulls need to be concerned about is that if they're going to go for the 5 mall, then obviously you want to wait, buy into that 5 mall. From the 5 mall, you have all that liquidity straight up to the top. That's what I'm looking for if I'm wanting to get bullish on this. Now, if you don't have that 5 mile test, there is a real potential that you can come up to the upper Bollinger and have a major rejection, just because the 5 mile needs to be tested basically every 5 days. It's a very common support, and when you push too far or drop too low without retesting that level, um, the market generally doesn't like that. Generally, it will want to go back to that level and retest. So we have had some sessions without retesting the level. It does need to be retested. It is within range to be retested. So just be aware of that. I'm not saying don't be bullish here, just be careful because they can pull down to the 5 mile and then head right back up. Now, one thing to be aware of is that the 20 mile is still pretty close to us. So if we do have a really aggressive 5 mile test, we can go all the way from the 5 mile to the 20 mile within the same session. Um, Especially if there's any sort of bad news, anything else like that. The moving averages are very heavily consolidated here. Now, to break that consolidation, really we need to have an upper Bollinger move, or some massive selling. Okay. Um, but like I said in I believe the last two videos now, seeing this cup all the way back up to the 690 is extremely strong. It looks very good. And just going over actual structure for a moment, I want to go to the 4 hour time frame. Yeah, we have this inverse head and shoulders still building weight. It looks very nice. Some might think that this is the building of a head and shoulders. I don't think so. And the reason why I don't think so is mainly because of this little dip right there. Um, This already has invalidated a lot of that left shoulder liquidity. The very high likelihood of that left shoulder liquidity is gone, and now we just close another cup to the upside, and then all of a sudden you can see how it just continues working its way upward. Okay, continuing closing cups, closing cups, closing cups, and you will be back up to the 690 range in no time. Now, again, the 5 mile is basically going to be right at there. 5 mile is basically going to be right there. Okay. Now, a move downward will look a lot like a head and shoulders from here. Um, Even though it'll look a little wonky, it can still turn into a head and shoulders pretty easily. So just be aware of that, is that from this structure, we're looking for a 5 mob bounce. If you have this turn into a bear structure and start ripping through the 5 mob, then that's a totally different story. That means that the bears want this massive chunk of liquidity right there, and that's how they would work to get it. I'm not so bearish right now. We've had plenty of major support tests within the last few sessions. I do think that unless there's some economic event or something, that this 690 is pretty much guaranteed at this point. We bounced off of the bottom of the major buying channel. We built support on top of this consolidation channel. We are sitting within multiple bullish structures, and this inverse head and shoulders looks like it just wants to take off anytime now. So, um, yeah, it looks extremely bullish. Again, my only concern right now is that the 5 ma needs to be tested, and it is underneath us. So, um, yeah. If you're wanting to be bearish on the SPY right now, again, the opportunity is when we have the upper Bollinger move. You wait for the upper Bollinger day 2. That's when you short into it. Our last shorts got all the way from the 688 to the 660 something. It was a very good move, but that's when you short is in the upper Bollinger day 2. Shorting prior to that is just wasted money. You're just going to chop into support. Um, so yeah, that's the TA tonight. Uh, I don't think I missed anything. It looks very, very solid for that move upward. I'd be very surprised if you don't get it. Now, again, you can have a very small cup basically created here. Build a small handle, which that would give us that 10 mod or that 5 mod test. And from that handle, then you could have that massive breakout. If we get that 5 mod test, I'm absolutely loading up calls into it because that's basically a free $10 move. Um, Actually, a lot further than that. It's actually closer to a $17 move. Basically, if you get that 680 again, calls are going to be very, 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 very good and make people a lot of money. Okay. Um, let's go over Treasury and gold. And quickly going over Treasuries. There's not a whole lot I want to show here. I just wanted to very quickly go over our moving averages and what's going on with that. So we had our bounce off of the lower Bollinger. That's very bullish. Remember, we always kind of buy puts at the upper Bollinger, calls at the lower Bollinger. So that was the time to buy. That was a very, very good bounce. So far, this bounce is taking us all the way right on top of this 50 mile. It's actually basically riding right on top of that level. And to me, that's saying it's building support. Our bearish indicators are starting to turn upward, meaning we're seeing the 5 mile pulling through the 10 mile. As of tomorrow's session, we'll see the 5 mile above the 10 mile. And from that range, we now need to see the 5 mile start reclaiming this 20 mile range, which is at the 950 or 9050, excuse me. Um, that's kind of the next step of this process is seeing the 5 mile cross above the 20 mile again. And from that cross, that's how we get back up to the upper Bollinger. Um, again, we're looking for this close back to the 92. We have tons of liquidity for it right now. And just going over some of the structure, we have this massive bullish cup, which we talked about for a very long time. We said that that 92 range was extremely likely to see a rejection. We got the rejection, which we expect a rejection at the top of a cup. It's bullish when you have that rejection. So far we're seeing everything we want to see as bulls. We're seeing all the structure. We have this very good inverse head and shoulders built right here. It's just moments, days until we get this close back to the 92 range. Complete that cup. From completing that cup, very likely build a small handle. And from that handle, that's how we head right back to the 95.20. So I'm very bullish. I thought today's treasury auction went great. It supported sort of exactly what we were looking for. Now, we do have the 30-year auction again tomorrow. It will be very key. It's sort of the same deal with the the 10-year is, are they going to target the long end of inflation, or are they going to worry about the very, very real potential that the labor market is crumbling? So tomorrow's 30-year auction, 30-year auction will show that a little bit more. Again, this is pretty much the last auctions until QE is done. So these major auctions are very, very important to be looking at. Um, that's Treasuries. I do want to take a look at silver and gold really quick because I did tell everybody to buy the dip on it, and I know only a few did. Kind of bothers me, but that's how the cookie crumbles sometimes. Um, Yeah, guys, remember when we were back at this range, I was saying, everybody load up on gold, everybody load up on silver. We're going to have a fair value gap all the way back up to close or to the all-time highs. Well, what do you know? It's coming. Uh, looks very good. Looks very, 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 very good. We're back into our old consolidation range again. Being in the bottom of a consolidation range means that you generally trade from the bottom to the top. So we still have some massive room on this thing. This consolidation range traded perfectly, broke through this center consolidation area. As you can see, this is when we started to climb to break into this upper consolidation range. So this worked out very, very, very well. Um, if you're still in gold and silver, be holding for those all-time highs. We're going to be getting those levels very, very soon here. The ADL and everything is supportive of that move. Um, Silver is just screaming it right now that we're going to get that all-time high price again. Let's look at the CAG. Yeah, I mean, we're almost on the futures, almost at the all-time high again on silver. And gold will definitely pull its weight, in no time at all. I'm not worried about that at all. Again, at this 3950 level, I said that there was a whole 70 to 80% upside in precious metals as a whole. I still heavily stand by that. I think that this is super, super bullish in here and that the upside is massive. So, going to end the video here. I hope everyone enjoyed watching. Thank you all for watching. Thank you to those who are supporting. It's been very, very helpful during this period where I'm really struggling with my health and everything, and it's been very hard on my depression, everything else. Um, so thank you. I appreciate it. It's nice when people are supportive and nice and don't use your bad moments against you to make you feel like dirt. That wasn't targeted at anybody. Thank you. Thank you all. I will talk to you in tomorrow's video. I hope you all have a great trading day tomorrow. Make some money. I like hearing about you all making money. So, yeah. Take care, everybody. I'll talk to you tomorrow.